Malcolm, we see that sort of moderation in the PMI numbers, right? How worried are we about the economic recovery, particularly as we see the regulatory smackdown potentially also causing downside risk?
It's not time to panic. That manufacturing PMI remains an expansionary zone. It was weaker than economists thought it was going to be in July, but it's still above 50. And in some ways, this pullback on the manufacturing side was inevitable. This was the first part of the global economy, really, to recover. China's factories got revving up again, and it drove that V-shaped rebound, probably at levels that weren't going to be sustainable going forward. So a bit of a normalization was inevitable. And the favorable thing for China's outlook is there looks to be a little bit of a rotation in growth. Those second quarter numbers were encouraging in that they showed the consumption, which had been lagging the recovery, was starting to pick up, and the non-manufacturing PMI numbers remain fairly healthy above 53. So, there's some health there. Maybe concerning, though, is some of the sub-indexes in that manufacturing PMI. Some of the forward-looking ones also didn't read too well. So new orders, new export orders also weakened. So if the global economy starts to, the recovery falters a little bit with the renewed virus concerns, that could mean less demand for Chinese exports. And then if we've got some Delta concerns in China itself, this could be a worry. But it's not panic time quite yet.
Right, Malcolm, so expanding on Heidi's point on the regulatory crackdown, what does that tell us about China's economic priorities?
Well, there's clearly been a shift, as Michael Everly spoke so well about. For a long while, China was seen as somewhere that was prioritizing rapid growth. Of course, there's been a change in that narrative and an evolution in that narrative over recent years as other things like the environment were prioritized. But you add up all the regulatory actions we've seen over recent months, and it's becoming increasingly clear that we are in a new order here. The label that's being dubbed around this is the common prosperity focus. Now, that's not a new focus from China's leaders. They've been speaking about that, the need to share the wealth gains, for decades. But it's become increasingly common, and what we're likely to see, and indeed are seeing, is this focus on national security, on common prosperity, which is curbing the inequalities in the income spectrum, and stability, which is trying to get rid of some of the gangbuster growth and some of the excesses and spread those benefits more broadly. All an effort to sort of tackle some of the rising discontent, whether it's gig economy workers without benefits and struggling for pay, whether it's parents squeezed by ever-increasing home prices and tuition costs, or whether it's small businesses squeezed by tech giants. As Michael Every again said, none of these are uniquely Chinese complaints or things that they're having to deal with. It's the policy response that's uniquely Chinese.
They're not even new complaints, Malcolm, right? The complaints over the property market, over drug prices, over access to healthcare, right? Do we have a pretty good idea of which sectors and industries will be affected?
Well, that's the trick, isn't it, in China? You never get a really clear idea. I mean, in Europe or the West, you can watch debates in Parliament. We can read a free press. In China, it's all about smoke signals. The latest catchphrase from Liu He or Xi Jinping's speeches, and trying to decipher what they mean and when they'll be implemented. As numerous experts have been pointing out, some of the signals around banning for-profit after-school tuition, these are not new. Xi Jinping's been calling on that for quite a while. Since, I think, at some stage in late 2018, he said that. And yet we had a couple of weekends ago this massive shock and investors taken by surprise. So the trick here is trying to keep tabs of what's coming out of official circles in China. But there's no magic cure here. We have to just try and decipher which of those signals are going to be implemented, and then the timing becomes key. But overall, the broad thrust for the economy certainly looks like more regulation, more scrutiny, and potentially that means lower returns for investors.